We're keeping our eyes on the markets, of course, and U.S. markets are rebounding today. That's after facing their worst trading day in 2019, with the Dow down by over 700 points. It did close off the lows of the day, but as you can see right now, climbing a little bit into the closing bells. 10 minutes to go. Let's get a trader's take in terms of what is going on in the markets. For that, Scott Bauer is joining us. He's the CEO of Prosper Trading Academy. Scott, good to be able to catch up with you today. Give us your take in terms of this this rally or this little bit of a rebound. We're not making up all of yesterday's losses, that's for sure.
You know, a couple things. As you just said, we're kind of rallying into the close here, which is a good thing, right? We want to close with some affirmation that maybe this rally is in place. So that's a good thing. However, I'm very skeptical about this, and I don't mean to be a downer here, but I would have rather seen the big sell-off that we had overnight, the flush that we had overnight. I would have rather seen that during a live open market session where the retail investor had the opportunity either to, just kind of capitulate and flush out, or the opportunity to really get in when we saw, the Dow futures down almost 600 points last night. So that to me makes this rally today a little bit, let's call it skeptical.
Why though, Scott? I mean, at the end of the day, presumably if you have some of the big institutions that are able to trade around the world overnight, that historically to me has always been more of a positive indicator versus the retail investor being able to get in.
Yeah, but if you look at volumes across the board today, volumes are actually pretty light, and especially coming off the last 2 days where, volumes were extremely heavy. Volume is actually really light today in comparison. So again, that's another indicator to me that, yes, there's this nice little rally back here, but maybe everyone's not buying into it.
Yes. And Scott, to that point, what do you think institutional investors and traders who really can move the market are most concerned about, are focused in on the most?
I think right now, preservation of capital. There's still some pretty decent gains for the entire year, right? They're not like they were, but there's still some pretty decent gains. So I think right now, you're looking at people saying, if I could lock in right now at December 31st, I'm okay with that. And I think that's why you're seeing just a real big acceleration towards treasuries, an acceleration towards gold, and people trying to take some off the table here just to say, all right, been through this turmoil, been through this volatility, I'm coming out, maybe not unscathed, but I'm coming out okay.
And Scott, which names or sectors do you think people really want to get out of? I mean, that's really what we're seeing. Where are you really seeing that pressure being exited and they're not going back into your point today?
Yeah. I mean, retail and consumer staples in general, just because of the ongoing trade war, just because of the ongoing growth demand or, growth worries globally. I think that's the natural one. Energy obviously is very weak. I think people are looking at that and saying, well, oil is on the decline, and maybe barring any sort of big geopolitical upheaval, we may see West Texas down below 50. On the other side, though, Catherine, I really think there's an opportunity in the banking sector. And, you may look at me and say, Scott, rates are, the 10-year's at 170 and rates are going lower. How could you look at the banking sector? Two reasons. A, they've really held in here. If you look at a Goldman Sachs, a Citi, a JP Morgan, they've really held in here as rates have just gotten absolutely trounced from almost 320 down to 170. Secondly, the added volatility in the marketplace that we've seen, that's going to help the bottom line for the trading revenues of these big banks come the third quarter. So I actually like that space where a lot of people are maybe on the opposite of that, saying they can only go lower because rates are going lower.
But the banks, though, that you've chosen are, so our viewers understand, they are much more the investment banks versus your traditional money center bank, to be clear.
No doubt about, yes, 100% no doubt about it. And that's the reason why I like these banks, because of the added volatility. And I think they're going to see their trading revenues really accelerate quite a bit into the third quarter here.
Scott, how focused are you on the, obviously we have to be, this is what caused a sell-off, but the currency devaluation of the Chinese yuan, and some would say that they didn't devalue their currency. It's not in their actual interest. 20, 30 years out or right now, they would prefer to be the global reserve currency. They're not going to get it there if, in fact, they use it as a political football or ping pong as it relates to trade tensions. So, in your opinion, and with people you've talked to, did they devalue it, and are they a currency manipulator, therefore, or did they just not step in and support it? It's two very different scenarios, and it matters as it relates to the relationship between China and the United States.
They are, and A, I don't believe they devalued. B, manipulation, maybe there's a little gray area there. By the letter of the law, and by the letter that the governing rules that are out there by the IMF, they actually did not manipulate. However, there's a political game going on here. There's a poker match going on. And, it's not so far out of the cards to think that the pressure that President Trump is putting on our Fed here, that maybe he's not trying to respond with sort of the same thing here. So, I think that is the worrisome thing for the marketplace, is that this has become less of an economic type of situation and more a war of words, a war of ego, and a bargaining chip.
So where does that leave you in terms of the move for the U.S. dollar? Do you think that the U.S. Treasury will come out and sell U.S. dollars and buy the euro? Thinking of a few other currencies that they might step in and buy to prop up, but what do you think?
No.
You don't think they're going to do that?
No, I don't, and maybe that's a last resort. I don't think that's in the game plan here over the next few weeks, next few months. However, if we get to the fourth quarter, if we get to the end of the year, and this situation has intensified even more, all bets are off. But I don't think that's in the game plan in the near future.
Okay, bottom line for our viewers today, Scott, is what as it relates to this environment that we are in?
You know what? Be cautious, but embrace volatility. Don't be afraid of volatility. Volatility brings opportunity. And so when you see a massive sell-off, you know what? You be very choosy. You can be picky. Maybe there's a stock that you're getting at a 5 or 10% bargain to where you thought you might be able to get it. So you have to stay close to the vest in this type of environment. And you cannot get married to a position as a trader. As a longer-term investor, start scaling in positions here. Because, again, I don't believe that we're through the last of the sell-off. However, I also don't think that the sell-off that may come, I don't think we're looking at a large number, a 5, a 10% sell-off. I just don't see that happening. But just pick your spots here.
Okay, Scott, we'll leave it there. Good to see you. Thank you.
Thanks, Catherine. You too.
Thanks. That's Scott Bauer. He's the CEO of Prosper Trading Academy.